Elon Musk's net worth has dropped $200 billion from its peak. Tesla stock is down 53% from all-time highs. BYD just outsold Tesla globally by more than 2 to 1. And SpaceX had 3 consecutive Starship failures that endangered commercial airline passengers. This isn't a temporary setback. This is the beginning of a complete empire collapse. Here's what's actually happening. Tesla delivered 1.79 million vehicles in 2024. BYD delivered 4.27 million. That's 2.4 times more. BYD isn't just beating Tesla, they're destroying them. And the gap is widening every quarter. In China, Tesla's second largest market, sales dropped 49% in February 2025 compared to the year before. Tesla now ranks 7th in China's EV market, behind 6 Chinese brands that cost half as much and are just as good. Meanwhile, SpaceX's Starship, the rocket that's supposed to take humans to Mars, has failed 3 test flights in a row. Flight 7 in January 2025 exploded. Flight 8 in March scattered. Debris that came within miles of 3 commercial airplanes with 450 passengers. Flight 9 failed to achieve orbit. And in November 2025, Booster 18 exploded during ground testing. But the worst part? Musk's political involvement is destroying his brands. A survey of 5,000 investors found that 85% believe Musk's political activities are hurting Tesla's business. Ross Gerber, an early Tesla investor who once defended Musk religiously, is now publicly calling for him to step down as CEO. In this video, I'm exposing the 5 reasons why Musk's empire is crumbling across every front simultaneously, why this isn't recoverable with his current strategy, and what you need to do if you own Tesla stock before it drops another 30–40%. But there's one market where Tesla's failure is so catastrophic that it reveals the entire company's fundamental problems. It's China. And the numbers show a company in complete freefall. Let me give you the context first. When Tesla built Gigafactory, Shanghai in 2019, Musk called it the future of the company. China was supposed to be Tesla's largest market, 1.4 billion people, growing middle class, strong EV adoption, supportive government policies. Everything looked perfect. For a few years, it worked. Tesla became the aspirational EV brand in China. Wealthy Chinese consumers bought Model 3s and Model Ys as status symbols. Tesla's China sales grew rapidly. But then the Chinese EV companies caught up. BYD, Xiaomi, Li Auto, NIO, XPeng, they all launched vehicles that matched Tesla's quality at 40–60% lower prices, and Chinese consumers started switching. The data is brutal. In February 2025, Tesla's China sales dropped 49% year over year. Not 5%, not 10%, 49%. In 1 year, Tesla lost half its China sales. Tesla now ranks 7th in China's EV market with about 6.5% share. Here's who's beating them. BYD is first with 37%, Li Auto second with 11%, Geely third with 8%, NIO fourth, XPeng fifth, and Xiaomi sixth. Xiaomi, the phone company, launched their first EV in March 2024. Within 1 year, they surpassed Tesla in sales. A company that never made cars before is now outselling Tesla in the world's largest EV market. Why is this happening? 3 reasons. First, Chinese EVs are now just as good as Tesla's. The build quality has caught up. The technology is equivalent. BYD's batteries are actually better in some metrics. The days of Tesla having a 5-year technology lead are over. Second, Chinese consumers increasingly prefer domestic brands. After various trade tensions and political issues, there's a strong support Chinese brands movement. Young people especially see buying BYD or Xiaomi as patriotic. Buying Tesla is seen as supporting an American company. Third, Tesla's prices are too high for a weakening Chinese economy. With youth unemployment at 18.9%, real estate wealth destroyed, and consumer confidence at record lows, spending $45,000 on a Model 3 isn't appealing when you can get a comparable BYD for $25,000 And it's not just China. Tesla's German sales fell 76% year over year in early 2025, 76%. The European market is rejecting Tesla even faster than China. Why? Volkswagen, BMW, Mercedes, and other European automakers have launched competitive EVs. Europeans prefer supporting domestic manufacturers. And Musk's political activities, his support for right-wing movements, his controversial tweets, have made Tesla toxic to progressive European consumers who typically buy EVs. Tesla's brand value dropped 26% in 2024, one of the largest brand value declines of any major company. Brand Finance, which tracks brand valuations, downgraded Tesla, citing reputational damage from CEO controversies. Globally, BYD sold 4.27 million vehicles in 2024 compared to Tesla's 1.79 million. That means BYD sold 2.4 times more vehicles, and BYD is still growing while Tesla's growth has stalled. Tesla delivered 1.79 million vehicles in 2024, virtually flat, compared to 1.81 million in 2023. Zero growth. For a company valued at over $600 billion, zero growth is catastrophic. Wall Street projected Tesla would deliver 2.3 million vehicles in 2024. They missed by 500,000 units. That's not a small miss. That's a fundamental breakdown in the business model. And 2025 looks worse, with China sales down 49% and Europe sales down 76% in early quarters. Tesla's full-year deliveries could actually decline year over year for the first time ever. But Tesla's problems pale in comparison to what's happening at SpaceX. This next crisis is perhaps the most shocking because it involves actual physical danger to hundreds of innocent people. It's SpaceX's Starship program, and the failures are accelerating. Let me explain what Starship is supposed to be. It's Musk's Mars rocket, the vehicle that's supposed to carry 100 people to Mars, revolutionize space travel, and make humanity multiplanetary. Musk has been promising it's almost ready for years, but the reality is very different. Starship has now had 3 consecutive complete failures. Flight 7 launched on January 16, 2025. The spacecraft exploded shortly after separation from the booster, complete loss of vehicle. Musk tweeted that it was RUDI, rapid unscheduled disassembly, his euphemism for it blew up. Flight 8 launched on March 20, 2025. This one was worse. The spacecraft broke apart during ascent, scattering debris across a massive area. And here's the terrifying part. Debris came within a few miles of 3 separate commercial aircraft carrying approximately 450 passengers combined. The FAA immediately grounded Starship and launched an investigation. Pilots reported seeing debris streaks. Air traffic control had to reroute flights. This wasn't just a failed test. It was a near catastrophe that could have killed hundreds of people. Flight 9 launched later in 2025 with modifications. It didn't explode this time, but it also didn't achieve orbit, the primary mission objective. The spacecraft reached space but couldn't complete the orbital insertion burn. Another failure, just less dramatic. 3 launches, 3 failures. Back to back to back. But it gets worse. In November 2025, during ground testing at Starbase, Texas, Booster 18, the latest version of the Super Heavy booster, exploded on the test stand. The explosion was so large it was visible for miles. Videos show a massive fireball engulfing the entire launch pad. This wasn't even a flight, this was ground testing. The booster exploded while just sitting there being tested. That suggests fundamental design problems that haven't been solved. SpaceX has now conducted 9 Starship test flights total since 2023. Only 2 could be considered successful, Flights 5 and 6. And even those didn't achieve all mission objectives. That's a 22% success rate. Compare that to NASA's Space Launch System, which Musk constantly criticizes. SLS launched successfully on its first try, Artemis 1 in November 2022. It completed all mission objectives perfectly. Or compare it to SpaceX's own Falcon 9, which has a 99% plus success rate after years of development. Starship is nowhere near that reliability, and it's not improving. Here's why this matters for investors. NASA awarded SpaceX a $2.9 billion contract to develop Starship as the lunar lander for Artemis missions. The timeline keeps slipping. NASA needs Starship to land humans on the moon by 2026-2027. But Starship can't even reach orbit reliably. If NASA loses confidence and cancels or significantly reduces the contract, that's billions in revenue SpaceX was counting on. And SpaceX's valuation, currently around $180 billion, is built on the promise that Starship will revolutionize space access. If Starship doesn't work, or takes another 5 to 10 years to become reliable, the valuation is massively inflated. Private investors who put money into SpaceX at peak valuations are starting to get nervous. Some are reportedly trying to sell their shares at discounts, a sign that smart money thinks SpaceX is overvalued. Musk keeps tweeting that Starship is almost ready and will change everything. But 3 consecutive flight failures plus a booster explosion on the ground tells a different story. This program is in serious trouble. And unlike Tesla, where Musk can cut prices or launch new models, you can't fake physics. Either Starship works or it doesn't. Right now it doesn't. But the technical failures might be fixable. The political damage might not be. Here's the crisis that makes all the other problems unfixable because it's destroying the brand among the exact customers who buy EVs. It's Musk's political involvement, and it's killing Tesla sales in real time. Let me give you the timeline. After buying Twitter in October 2022 for $44 billion, Musk transformed the platform into what he calls a free speech zone. But what that meant in practice was allowing previously banned accounts back, reducing content moderation, and personally amplifying right-wing political content. Musk endorsed Donald Trump for president, spoke at Trump rallies, and contributed over $100 million to Trump's campaign through his PACs. After the election, Trump appointed Musk to lead the Department of Government Efficiency, DOGE, a made-up agency designed to cut federal spending. But here's what Musk didn't anticipate. Tesla buyers are overwhelmingly progressive and environmentally conscious. These are people who buy EVs specifically because they care about climate change and sustainability. And they're not thrilled that the CEO of their car company is now the most visible supporter of a president who calls climate change a hoax. A survey conducted by market research firm Caliber found that 85% of potential Tesla customers said Musk's political activities negatively impact their purchase decision. 85%. That's not a small group. That's the vast majority of the target market. And it's showing up in the data. Tesla's brand value dropped 26% in 2024. That's one of the steepest brand value declines of any major company globally. Brand Finance specifically cited CEO controversies as the primary driver. But the damage goes beyond just sentiment. There are now organized Don't Buy Tesla boycott campaigns in multiple countries. In Norway, Tesla's most successful European market, there were public protests with people holding Boycott Tesla signs. In California, Tesla's largest U.S. market, progressive communities are openly rejecting the brand. Ross Gerber, a money manager who was one of Tesla's most prominent bull investors, has completely reversed his position. He's now publicly calling for Musk to step down as Tesla CEO. In interviews, Gerber says Elon has become a liability to the brand, and he's alienating the exact customers Tesla needs. Even inside the company, there's turmoil. Multiple reports indicate that Tesla executives have privately told Musk that his political activities are hurting the business. But Musk dismisses their concerns, saying he won't be censored. And here's the kicker. In June 2025, Musk abruptly resigned from his Doge position after publicly attacking Trump on Twitter over a policy disagreement. The feud was public, nasty, and embarrassing. Musk accused Trump of broken promises. Trump called Musk disloyal. So now Musk has managed to alienate both sides. Progressive Tesla buyers hate him for supporting Trump. Conservative Trump supporters hate him for attacking Trump. He's created a lose-lose situation. The political damage also extends to SpaceX. Democratic senators have questioned whether a company led by someone so politically controversial should receive billions in NASA contracts. While NASA hasn't canceled anything yet, the political pressure is mounting. And this isn't something Musk can fix by launching a new product or cutting prices. Brand damage from CEO behavior is extremely difficult to repair. It takes years of consistent positive behavior to rebuild trust. But Musk shows no signs of changing. He continues tweeting controversial political takes daily. He continues antagonizing the exact demographic that buys Teslas. This is a self-inflicted wound that's getting worse, not better. And unlike technical problems that engineers can solve, this requires Musk to fundamentally change his behavior, something he's shown zero willingness to do. So let's look at what all of this means for Tesla's valuation. Here's the financial reality that proves Tesla stock is still massively overvalued even after dropping 53%. It's the numbers. And they show a company priced for perfection facing multiple existential crises. Let's start with the stock price. Tesla peaked at $479 per share in November 2021. As of late 2025, it trades around $220. That's a 53% decline, wiping out approximately $800 billion in market capitalization. But even at $220, Tesla's market cap is still around $600 to $650 billion. That makes it worth more than Toyota, Volkswagen, GM, Ford, Honda, and Nissan combined. All of those companies together sell about 20-30 million vehicles annually. Tesla sells 1.8 million. Tesla's price-to-earnings ratio is around 60x. That means investors are paying $60 for every $1 of profit. Toyota's PE is about 9x. Ford's is 6x. Tesla is priced at 6-10 times higher valuations than traditional automakers. Why? Because investors believe Tesla will grow massively in the future. The valuation isn't based on current profits. It's based on assumptions about future growth. But those assumptions are breaking down. Tesla's deliveries were flat in 2024, 1.79 million versus 1.81 million. Wall Street had projected 2.3 million. That's a massive miss. If Tesla can't grow deliveries, the premium valuation makes no sense. A company with zero growth shouldn't trade at 60x earnings. It should trade at 15-20x like a mature automaker. Do the math. If Tesla's PE drops from 60x to 20x, which would still be higher than most car companies, the stock should trade around $70 to $80 per share. That's another 60 to 65% downside from current levels. And that's assuming earnings don't decline, but they might. Tesla has been cutting prices aggressively to maintain volume. The average selling price of a Tesla vehicle has dropped from about $55,000 to $45,000 over the past 2 years. Lower prices mean lower profit margins. Tesla's operating margin has fallen from 17% in 2022 to under 10% in 2024. If margins keep compressing, earnings will decline even as revenue stays flat or grows slightly. Plus, Tesla has massive capital expenditure needs. Building new factories, developing new models, scaling production. All of that requires billions in investment. And now Musk is also funding xAI, his AI company, and has obligations to Xmar Twitter, which is burning cash. The financial analyst community is slowly waking up to reality. In 2021, every analyst had buy ratings on Tesla with $500 to $600 price targets. Now, several analysts have sell ratings with price targets in the $120, $150 range. Gordon Johnson, a longtime Tesla bear, has a price target of $85, arguing that Tesla is still massively overvalued even after the decline. The market seems to be coming around to this view. But the adjustment is happening slowly and painfully for shareholders who are holding on hoping for a recovery. So what should you actually do if you own Tesla stock? Here's exactly what you need to do if you currently own Tesla stock or are considering buying it. Step 1. Accept reality. Tesla is not going back to 400 plus per share anytime soon. The growth story is broken. BYD is winning. Chinese market is lost. Political damage is real. Don't hold out hoping for a Musk miracle. Step 2. Calculate your position. If Tesla is more than 10% of your portfolio, you're overexposed to a single stock with multiple existential risks. That's too much concentration risk. Step 3. Decide your exit strategy. You have 3 options. Option A. Sell now best. If you believe the stock will drop another 30-50% from here, take the loss, get the tax benefits, move on. Option B. Sell on rallies. Tesla stock is volatile. Wait for a rally to $250 to $270 and exit. Don't wait for full recovery. It's not coming. Option C. Hold and hope. Only if you're a true long-term believer, 5 to 10 years, and can stomach more downside. But understand you might be waiting a decade to break even. Step 4. Replace with better EV investments. If you want EV exposure, consider BYD, the actual leader in global EV sales. Toyota, TM, hybrid dominance and solid EV pipeline. General Motors, GM, cheap valuation, growing EV sales. Rivian, high risk but real potential EV ETFs for diversification. Step 5. Monitor for further decline. If Tesla drops below $180, that's a breakdown of critical support levels, could indicate a move to $120-$150 range that analysts predict. Step 6. Don't listen to the cult. Tesla has a cult-like following that will defend the stock no matter what. Ignore them. Look at the data. Sales are flat. Competition is crushing them. Political damage is real. Make decisions based on facts, not faith. So we've covered the 5 reasons why Elon Musk's empire is crumbling. Tesla's global sales collapse with China down 49% and now ranking 7th, while BYD sells 2.4 times more vehicles. SpaceX's 3 consecutive Starship failures that endangered 450 airline passengers and showed the program is years behind schedule. The political toxicity crisis with 85% of potential customers saying Musk's behavior hurts their purchase decision and organized boycotts worldwide. The valuation math that shows Tesla is still overvalued by 60-65% even after dropping 53%. And exactly what you need to do right now if you own Tesla stock before it drops another 30-50%. These are the warning signs that informed investors are acting on while true believers keep hoping for a recovery that isn't coming. But here's something I didn't tell you at the start of this video. Everything I just shared is completely useless if you don't know which EV companies will actually dominate the next decade. Without knowing where to invest instead of Tesla, you're just sitting in cash watching the EV revolution happen without you. Comment under this video, and I will reveal the 3 EV stocks that will crush Tesla over the next 5 years, including BYD's path to 10 million vehicles annually. I'll see you in the next one.